Guys, I've made plenty videos on this topic, but I think real world assets are going to create millionaires in this next bull market, as I think it's going to be one of the strongest narratives. In front of AI, in front of depin, in front of layer 2s, in front of GameFi, in front of the Bitcoin halving, in front of the Bitcoin ETF, in front of all of it. And the reason why is because institutions are attracted to real world assets. It's literally bridging TradFi with Web3. So in this video, I'm going to talk about what RWA protocols are, why I'm buying them, which I kind of just already said, which ones I'm buying, and my investment structure, which kind of goes into my yield farming strategy and how I'm accumulating some or all of them. So before we get started, I do have to say this video should not be taken as financial advice. This is just my own research, my own opinions, my own perspective, and it should be treated as such. Always do your own research, but use this channel as a starting point. Okay, so what are RWA protocols? RWA obviously stands for real world assets, and it's basically, look at it this way. In any functioning financial system, you need financial products. You need borrowing and lending, you need derivatives, you need bonds, you need payments, you need currency. Like, there are things you need in a financial system in order for it to function properly. TradFi has all those things, and slowly but surely, crypto is starting to have all those things as well. And that's how I like to define real world assets. It's the real world assets coming on chain. Simple as that. Okay, now, why am I buying real world assets? Well, I said at the beginning of the video, they're attractive to institutions. Blockchain technology has features and benefits that you can't do with the current databases that these companies are using. And that's why all these companies and banks and financial institutions are coming on chain and creating crypto products. Like, you have the largest financial institutions in the world creating crypto products. Morgan Stanley, BlackRock, Fidelity, you name it. Corporations holding crypto on their Bitcoin on their balance sheets. Like, the list goes on and on. It's attractive to institutions because blockchain technology can offer different features to the same products that exist in the real world on chain. Like, you can do more things. So now, from an investment standpoint, let me show you another reason why I'm investing into RWA protocols. Guys, if you go on CoinGecko and you type in RWA, it pulls up the RWA category. So you see Ondo Finance, Centrifuge, Pendle, Polymesh, Mantra, Maple. Guys, the first one is number 126 on CoinGecko. I believe that a lot of these projects have the chance to get into the top 100. So that offers a great investment opportunity because there's a long way to go. Like, even the top one, the market cap isn't even $1 billion, guys. That's insane. In any bull market, you have the law of diminishing returns. So you want to find projects who haven't had their time in the sun yet, aka projects that haven't pumped. Ethereum isn't going to pump this cycle as much as it did last cycle, because in order to go 200%, ETH has to go from a $350 billion market cap to 600 or 700, whatever $1 billion market cap, excuse my ballpark math. Whereas if it was a smaller market cap, such as 741 million like Ondo, that's only 1.4 billion, which is a drop in the bucket. All right, so you want to find protocols who haven't pumped yet, and none of the real world assets that I'm about to talk about here, they didn't pump last cycle. So now, what is the first real world asset protocol that I'm buying? The first one is Pendle Finance, right here. So Pendle Finance is helping to bring bond stripping onto the blockchain. So in TradFi, there's this thing called bond stripping where you can separate the principal from the yield, and it offers institutions a different way to hedge their risk. Remember, like I said, the cool thing about RWA protocols is that they're using blockchain technology, and they're able to offer features that you can't get in TradFi. With Pendle, you can speculate on not just the current yield, but you can speculate on the future yield, which you can't do in TradFi. So institutions are loving this, and that's why it's pumped over 5x since we called it out in November. We made a video going through all of the fundamentals of Pendle, the tokenomics, the team, everything. And then I made a video on how to turn a small amount of money into millions. So definitely give those videos a watch if you haven't. If we go on DeFi Llama, you can see the TVL on Pendle is 2.1 billion. And look at that exponential growth curve. It went from 264 to 2.1 billion in a pretty short time. Because guys, this is a super desired use case that they're offering. Bond stripping is a big deal. It's a multi-trillion-dollar industry. And even if Pendle just carves off a small portion, like less than 5%, that can take them up to a $15, $20 billion market cap. And just so you guys know, Pendle makes up 40% of my HODL bag. Let's go on to the next project. The next project that I'm holding in terms of RWAs is Centrifuge. We made a video going through the fundamentals of Centrifuge, tokenomics, everything. And then I made a video on how to turn a small amount into a large amount along with the yield farming strategy. Give those videos a watch if you haven't. Guys, all these videos I'm talking about, don't just buy the token because I'm talking about it and giving you a few pointers here. Like, actually do your research. So Centrifuge allows you to borrow against real world assets. So if you have an invoice or real estate or a treasury bond, you can deposit it onto the Centrifuge platform and generate credit from it. And you guys know I'm super bullish on private credit protocols, and I've made videos on many of them. If you go to rwa.xyz, you can see that Centrifuge is number one. In terms of active loans, they have $270 million in active loans, average APY of 8.8%, and they have a 0.19% cash drag, and that's the percentage of the capital that's in idle. So that's really, really good. And you can see their market cap's only $360 million. Guys, that is a baby. The next protocols I'm going to cover are also private credit protocols. And the reason why I'm bullish on them is because you can see that in the last bull market, active loans went up to $1.5 billion. Right now, we're at 4.92 million. Guys, this is going to increase way more in the next bull market. Reason why is because this is the first crypto bull market where interest rates are high. So when interest rates are high, that means the cost to borrow money is more expensive. You're able to borrow money on these protocols for cheaper. Not only that, they're lending mainly to small to medium-sized enterprises, which gets charged more to borrow money for some reason. Banks look at them as risky. But also, as the bull market ensues and the balance sheets of these crypto companies start to balloon, it's going to increase their creditworthiness, which is going to inspire them to come to protocols like these to borrow money, which is going to increase the active loans of these protocols, which is going to increase their fundamentals, which is going to lead to a price pump, in my opinion. And just so you guys know, Centrifuge makes up 7% of my HODL portfolio. The next protocol is maplefinance. Guys, you see Maple, the orange, that's Maple. Maple's done more loans than any of the protocols in totality, but they're behind Centrifuge in the active loans. They have a 0% cash drag, so they're utilizing all the liquidity on their platform. And they help connect institutional borrowers and lenders, aka private credit. They do all the KYC and all of that stuff off of chain, and they sign the documents, and once everything is signed and agreed upon, the money is released on chain. I always say you can build centralized projects on top of decentralized technology, but you can't build decentralized projects on top of centralized technology. It just doesn't work. And that's the cool thing about blockchains. Like all the other projects, we made a video going into Maple's fundamentals in depth, tokenomics, team, everything. And I also made a video on how I plan on turning $15,000 into over $1 million invested into Maple. Definitely give that a watch if you're interested in this project as well. Don't just buy because I'm talking about it here, because I'm not giving you guys enough info to justify an investment. I'm just planting the seed here. Maple is also a private credit protocol like we've been talking about. And they're solving a huge issue. Like, I've already explained most of it, but another thing is that in crypto, you can only get access to over collateralized loans. Think about how impractical it would be if you wanted to get a mortgage on a house that was $400,000, but in order to borrow the money, you have to put up $500,000 or $475,000 or whatever the case is. The whole point of borrowing money is to get access to capital that you didn't have. But crypto is still lending money based on the pawn shop model. If I want to pawn this water bottle or my phone, because you can't pawn a water bottle. This is a remote actually, but let's say it's a phone. You go to the pawn shop, you give it to them. They tell you how much it's worth. Actually less, because they're trying to protect their ass as well. And they give you money based off of it. If you don't repay the loan, they sell your collateral. That's exactly how lending works in crypto right now. And it's more risky for the borrower because you have to have faith that the company or platform you're borrowing from, BlockFi or Celsius, isn't going to fuck off your collateral, right? It's not how real people borrow money, and it's damn sure not how institutions borrow money in the real world. So this is a huge problem, and the reason why it's like that is because everything in crypto is permissionless. You have these anonymous wallets, and now there are companies like Maple, like Centrifuge, that are allowing you to disclose who you are, just like a regular bank. And then you get access to funds based on credit, based on whatever metrics they look at. And just so you guys know, Maple makes up 10% of my overall HODL portfolio. The last two protocols making up 5% each are Goldfinch and Clearpool. And again, made a video going into the fundamentals, tokenomics, everything for Clearpool and Goldfinch. And I made videos showing how you can turn a small amount into a large amount along with the yield farming strategies for both. Again, give and watch if you're interested. This is just here planting the seed. But you can see that Clearpool has done $183 million in total loans, and Goldfinch has done $112 million. Active loans right now, Goldfinch is at $107 million, while Clearpool is at $20 million. And they do have a bit of a cash drag. Goldfinch has 0, but Clearpool has 15. And this is why it's a small percentage. The fundamentals are a little lower, so that is risk management. You put a little bit into the protocols you're not as convicted on. Like, part of me want to put all of it in Maple, but it's just like, what if something happens? What if the founder dies? What if they get hacked? What if whatever? You never know. You place your bets based on your convictions, and that's how you win long term. Now, guys, in terms of yield farming, I am accumulating Maple and Clearpool passively because those, and Pendle, because they offer good pools with volume to TVL ratios. First, you find the asset you want to accumulate, because the most important thing is not just the investment, it's the structure around it. We've all heard about the Doge guy who his holdings went up to $1 million, but he just wrote it back down. I bet you he wished he sold. You have to have a take profit strategy in place, and I've made a video showing you how to master the art of taking profits, doing your price trigger, your time-based trigger, and your trend trigger. And then I like to set aside a portion of my portfolio for yield farming so I can accumulate these passively. You figure out the asset you want to earn. In this case, those would be these. Then you go on CoinGecko and see where most of the trading is happening, because that's probably where you want to provide liquidity. This is like selling shovels during a gold rush. Then you back test the range you want to provide liquidity in on something like Builder Metrics. I've made videos. All the videos I made on yield farming these protocols, I showed this exact process I'm just telling you here. Go on Builder Metrics, you back test to see what would have been my APY if I would have been in this position for 60 days, 90 days, whatever. You make sure it's a good volume to TVL ratio. You set your ranges intelligently, and then you provide liquidity and you rebalance accordingly. And guys, if all this stuff is confusing and you want to learn how to generate passive income on your favorite assets like a professional market maker, not a degen, and you want to get access to our buy and sell calls and just be a part of an elite community of like-minded people who are passionate about investing in crypto, click the link in the description, book a free strategy session. We'll see if this program is a good fit for you. We only let a certain type of person in and a certain amount of people in. So if that sounds of interest to you, we look forward to speaking with you. But other than that, if you got value from this video, I ask that you drop a like, drop a comment. Let me know what RWA protocol you want me to cover next. Subscribe also if you got value. But with that, I thank you so much for tuning in. I love every single one of you, and I'll see you in the next video. Take care and trade safe.